Okay, so let's talk about what the scenario is. We've gone through the various factors. Now we have to kind of put them all together because some of them are bullish and some of them are bearish, but we have to trade. We have to make money. So I think that right now we're going to see the boom period, the very top thing here. The economy will boom into at least the fall. Let's say August or September. We should see the stock market do well. We should see the economy do well. But then we're going to start to see the economy grow slower. We're going to see some of those policy decisions of high debt, high regulations, higher taxes, all of those things start to bite. And we're going to start to see slowing of the economy. We're not going to see 6% growth or 3%. We might start to see 2%. And even the Biden administration is saying that in 2022, we won't grow past 2%. That's what the Biden administration is saying. Then we're going to move to higher inflation. And by the end of the year, it's a no-brainer that we're going to have inflation at 5%. I think it might be higher than that. I'm really being conservative when I say 5%. I could say something super dramatic, but let's just say over 5%, and we're at 4.2% right now. So saying 5%, that's kind of a no-brainer. 6, 7, 8, 9, even 10% are possibilities. So the stock market will rally into the late summer or early fall. And I think then that when the economy starts to slow, we'll see a 10% correction. And that will be in August, September, October, in that time frame. Now, that is in a way a good thing. Here's why. It'll scare everybody to death. Everybody will think that it's the end of the world, the apocalypse is upon us, and the stock market's going to drop dramatically. And instead, it'll only drop 5 to 10%. It'll shake out all the weak hands that are in the market, the overly bullish people. And then we'll start to rally more as inflation comes back and real interest rates decline. Now, let me explain this. You see, one of the most bullish things that can happen to a market, and I'm going to talk about gold next week, I think, but here's the point. But one of the most important things that is bullish for the stock market is real interest rates. Real interest rates are if you take interest rates and subtract inflation. So right now, we have negative real interest rates. That is to say, you can borrow money for free. Well, guess what? People are borrowing money for free and they're buying stocks. So we're seeing this incredible boom in the stock market largely on the back of borrowed money. Why? Because it's free money. Inflation is higher than the interest rate. So we'll start to see that come back. And at the same time, all of this is happening, we're going to see a big boom in the commodities market. And we're already seeing that. And of course, that's causing more inflation. So commodities, stocks, all going to be boom. We got to have that shakeout first, I think, in August, September, October. We'll get that shakeout, and then we'll boom again going into the first quarter of next year. Well, then what happens? Well, then I think we've got phase 2 of our scenario. And this really starts to kick in now, but it really accelerates next year. Risk is dramatically increasing right now. And it's going to continue as central banks keep interest rates at 0 or below 0 in some European countries. That's increasing risk. Now, look around the world. We have a housing boom around the world. We have Bitcoin going to crazy things. We have meme stocks going to crazy levels. We have the biggest bubble in bonds in global history, in human history. So risk is increasing dramatically right now. And it's going to continue to increase. Why? Because of central bank policies of keeping interest rates so low, they're below where they naturally would be. So sometime next year, the Fed is going to start to tighten. They're going to say, oh my God, inflation is now 5 or 10%. We said we wanted it to be over 2% for a while. The European Central Bank says, oh, we want it to be over 2% for a while. Japan's been trying to get it over 2% for 30 years. But eventually the Fed, the ECB will start to tighten because there's no way they can say that the economy is being affected by COVID anymore. Now that tightening is going to cause a wave of bankruptcies. Right now, we have record-setting number of zombie companies. Zombie companies are companies that they're not bankrupt, but they can't pay the interest and principal on their debt. So they are the living dead, okay? They're the living dead. Higher interest rates will cause those companies to go bankrupt. We already have a corporate debt at record-setting rates in the United States. We have government debt at record-setting rates. Personal debt is actually in pretty good shape, but it's starting to move in the wrong direction. It's starting to increase. So it's not at a bad level yet, but maybe by next year it will be. And so I'm afraid then we get the Biden bust, which is we could see a major economic crash in 2022, a stock market crash in late 22. That would then cause gold to drop. I'm bullish on gold right now. We would see gold drop when this crash comes, but it would rally later. The reason it goes down at the beginning of stock market crashes is people sell off other assets in order to support their stocks. So Bitcoin would go down, gold would go down, and then commodities go down as we go into a recession. So I've now explained to you the boom, that's this year really, and then the bust is really kind of come next year. So we can make a lot of money in the boom and the bust. Now, you need to be on top of the situation because obviously negative things late next year could impact your job, your house, your business, and so on and so forth. So you need to protect yourself from all of those things. But that's a year from now. We need to stay focused right now on making money in the boom period and then preparing for the next big move, which will be down in a year from now.